What's going on, guys? Today we are going to be talking about SoFi as they are announcing their Q3 earnings on Monday before the market opens. And what I want to do in this video is I want to take a look at what the expectations are for revenue as well as EPS around the Q3 earnings. But more importantly, I want to look at Q4 as well as 2024 because there are some interesting expectations around where SoFi is headed in 2024. And I want to give my opinion on what could really benefit this business and lead to SoFi being profitable. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at how SoFi stock has performed over the last couple of months. We can see here today, the stock is down around 0.5%, however, up 1% after hours. And if we look at the last 5 days, we see that it is down around 5.5%. And this is interesting because we've seen a lot of companies put up very good numbers, whether it's Meta, Amazon, Microsoft, or Google, they've all had very strong EPS and revenue numbers. However, the stock market has still reacted in a negative way, and SoFi is no different. Over the last month, SoFi is down around 11.5%. However, from the highs of the month to where we are trading at now, it is down 20%. And we see something very interesting when we look at the last 6 months, because when we look at the last 6 months, we can see that SoFi hit a peak at the end of July of $11.45. And a lot of companies in the market, if you look at their stock chart right now, they peaked back in July as well. And oftentimes, many of them peaked on July 31st. And what we have seen since then in Q3 is a decline in stock prices. SoFi is no different as its stock has declined 40% in Q3. And for Q3, analysts have an average EPS estimate of -7 cents, a low estimate of -10 cents, and a high estimate of 0 cents of EPS. And for average revenue expectations, I've seen them anywhere from $510 million all the way up to $515 million. And this would represent growth of around 20 to 23% year over year as they brought in around $419 million a year ago. And in my opinion, I think we'll see SoFi put up slightly better numbers than what we are seeing here. I think their EPS will come in somewhere around -5 cents or -6 cents. And then revenue, I think will probably be in 520 plus range. And I'd really like to see that because revenue growth for a small business like SoFi that is still in its growth stage is very important. We've seen that happen year over year. However, they have really fallen off in this last year as economic concerns around interest rates and other things have really affected their business. What I wanted to do next is take a look at the different sections within SoFi's business and give my opinion on them and where they are at currently and where they could be headed in the future. So let's start off with their personal loans business. This will be a very bad business right now just because of the fact that interest rates have been going up in a major way, and a lot of people are not going to be looking for personal loans because it is going to cost a lot of money. Banking, however, I think they are going to be in a very good spot. Banking, they are offering a 4.6% APY on savings accounts, and this is a very good way for them to get customers in the door and really get them into their ecosystem and using a lot of their other products. Credit score and insights, nothing really to say there. Mortgage loans, very down. There are not going to be a lot of people buying houses right now. We are seeing the housing market start to correct down actually for the first time in a while, and this is obviously going to hurt SoFi's business as they won't be offering many loans. Student loans, very similar situation. However, as student loan repayments begin again, I think we could start seeing a lot of people gravitating into SoFi's ecosystem. This is just not going to affect this quarter's numbers because student loan repayments didn't start until October. And we can see this noted on studentaid.gov as the payments were paused over the last few years due to the pandemic. We are finally seeing these payments restarted. However, the first payment is not hitting until October, so this will not affect SoFi's numbers until their next quarter. Their investment sector, I don't expect a whole lot from either. As we have seen the market decline over the last quarter, oftentimes investors will really pull their money out of the market and not pay as much attention to it. So I don't expect a whole lot there. Private student loans, same situation where it should pick up in the fourth quarter. However, in the third quarter, I'm not expecting a whole lot. Credit cards, this could be a big benefit as well for SoFi's business because as people really get into the banking sector, they would often sign up for a credit card to allow them to actually utilize that money. So I think SoFi could see some growth here, especially again with that 4.6% APY that's getting a lot of people in the door and then using some of SoFi's other products like their credit cards. Insurance, not a whole lot to comment on there. And then auto loan refinancing, I expect this to be down in a major way. A lot of people are not going out and buying cars either. It's similar to mortgages where people are not buying homes, they're not buying cars because rates are so high and that makes it a lot more expensive to buy these larger ticket items. So as I mentioned, there are a few different catalysts that could affect SoFi's business in a positive way over the next couple of quarters. The first being the repayment of student loans. This is expected to have a dramatic effect on SoFi's profitability, as analysts are projecting that they will come in with -1 cent of EPS, on the low end -2 cents, and on the high end +1 cent of EPS. This would be a very good thing for SoFi's business to finally be reaching profitability. The next big positive that could affect SoFi's business is the potential lowering of interest rates, and I think this has to do with why there is such a large range in numbers for 2024. We could see that the low EPS estimate is -13 cents and the high estimate is actually +12 cents. And a lot of this, in my opinion, has to do with when analysts are expecting the Fed to start lowering interest rates. If we see the Fed start lowering interest rates in Q1 or Q2 of 2024, I think SoFi could actually achieve this higher EPS estimate of +12 cents. If they wait until halfway through the year, I think it's more realistic that they achieve somewhere closer to this average EPS estimate. However, if they don't lower interest rates anytime in 2024, I think we could expect SoFi to come in with somewhere around this -13 cents. And a lot of this has to do with the way that SoFi's business is structured. If we look again at the different sections of their business, we could see how interest rates really impacts their overall business model. Mortgage loans, if we see rates start to fall, then we would expect a lot of people to refinance, and this will help SoFi's business. Same thing with student loan refinancing, as well as private student loans and auto loans as well. All of those are going to be impacted in a positive way from going from a high interest rate environment to a low interest rate environment. One of the things I like most about SoFi is how well they have diversified the business over the last couple of years. Getting into the banking sector and offering checking and savings accounts has really helped stabilize the business, because when they were only offering loans, when we saw variations in interest rates, this had a huge effect on the business. And now that they are doing banking, credit cards, as well as a number of other things, this is helping to stabilize their business overall. And I think this will show in 2023 and 2024 as we start seeing some of their numbers, especially with student loan repayments restarting. So keep in mind, SoFi for me is a very small position in my portfolio, and that has to do with the fact that it is not a profitable business right now. They hopefully will reach it in the next 12 to 18 months. However, it is important to keep in mind how you are allocating your positions. You don't want to have very large positions in certain stocks that are not proven business models. And right now, SoFi still has a little bit left to prove before they hit profitability. So keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.